Hi, it's Frank Cappelleri from CappThesis. Today we're looking at the three most important charts for June 14th, 2023. So let's start with this one. This, of course, is the S&P 500. And we can see that this also includes all of the CPI dates from the beginning of 2022 all the way to June of this year. And so as we can see that some of these dates are colored in red, some in blue. So the ones in red just show that the S&P was lower a month after the report. The ones in blue was higher a month after the report was released. And so what stands out here, especially since the beginning of this uptrend, is that from the report in November of last year all the way to now, the S&P has oscillated between gains and losses over a 4-week period in between the reports, right? So that may sound interesting only because we know the S&P is now up about 24% since that low. But again, there's been a lot of dips, there's been a lot of rallies, but really we haven't seen an extended uptrend this whole time. And this is even more clear here. Now we have this, the price action here is fainted for a reason. We can see that if we just remove the noise, it's just a series of rallies, shorter pullbacks, bigger rallies, which in effect has produced higher highs and higher lows. Now, one thing that has changed recently, of course, is that the pullbacks have been much shallower. And so recently, the biggest drawdown for the S&P has been 3.4%, which happened in May. That's compared to 9% pullback we had from February to March low, and the 8% pullback from December as well. So from this perspective, it appears that we could be due for a bigger one. Now, that seemed like to be the case over the last few weeks. It hasn't happened yet. We have to be prepared for one of those. And again, even if that is the case, the S&P has now built up a cushion to at least absorb a bigger downside shock if and when that occurs. Now, much bigger picture is this. Now, we know recently that for the first time since August of last year, the S&P has its RSI, its 14-day RSI indicator, hit overbought levels. Right now, that's concerning only because we know that that doesn't last forever and sometimes leads to a greater pullback. But I think we need to take a step back and look at what this can mean going forward. And what we have here is 14-day RSI, again in red, and the 50-day moving average of the 14 RSI to smooth it out a bit to give us an idea of really how momentum can take shape when things really start to get going. And so right here is the first time that that 50-day moving average of the RSI crossed 60 back in 2020, and that was right around in May here, right? And as that occurred, really kind of lined up with how the S&P started to really mature in its uptrend. We had the explosive move off the COVID lows here. And again, this is a mature, more trustworthy and consistent uptrend that lasted, of course, until the beginning of 2022. Now, the cool part is that if we just use this 50-day moving average of the RSI, it didn't cross below the midpoint here until early 2022. So that means if we just use this indicator as a reason to get in above 60 and a reason to get out below 50, we would have captured the majority of this move. Now that's interesting because we're just recently getting close to hitting 60 again for the first time, right, in almost a year and a half of the RSI now. So again, extended short term, but if this really is the beginning stages of a much longer move, then we can use the same logic, right, and stay in this trade, so to speak, until we see this cross under 50 again. That's it for today. Talk to you soon.